Welcome back to Bold TV. I'm David Grosso, and this segment is brought to you by Engineered Tax Services, where engineering and accounting come together. Joining us via Skype is the CEO and founder of Engineered Tax Services, Julio Gonzalez. How you doing today, Julio?
David, how are you doing? I'm doing good here.
Always great to see you. According to Markets Insider, the U.S. government could raise more than $1 trillion in additional taxes over the next decade through stricter IRS enforcement. Julio, can you break down what that would mean in practice?
Yeah, well, they said that it would cost us $100 billion to get that extra $1 trillion. So it sounds like a great investment, right? It sounds like they want to, staff up, hire more people, and have them go after the big companies and the big CEOs to generate more tax into the Treasury.
So 15% of all taxes Americans owe don't get collected. How does that work?
Yeah, I think it's probably just the fact that they just can't catch up with everything, right? So, there's a lot of people that just don't file. There's a lot of people that have missed different filing periods, don't report, and just not enough people to go after it. So, yeah, that's probably very true. Certainly, we hear of people getting audited 15, 20 years after the fact of not paying taxes for 20 years. So,
Wow.
yeah, it's just a number game. I would hope that, though, David, I would hope that they could maybe fix this through artificial intelligence, some AI, where, maybe this is something we could be doing in real time and not, having to spend a bunch of taxpayer money hoping that this result will work out. I don't know.
That is a really good point, Julio. So is that $100 billion figure figuring in that you actually need humans to go over taxes instead of computers? Why isn't the government maybe looking at technology as a solution that would be, a lot less costly?
Yeah, I think it's time. I think it's time to look at technology, to look at AI solutions that basically bring down the cost, but also bring in the revenue and really start to flag these things down. They got the database, right? But they don't have time to go through the database. That's why they're 15, 20 years behind on audits, right? That's why we see audits way after the fact. So, and those are real audits.
Records 15 or 20 years later. How do you even deal with that with a client? Like 20 years ago, I guess I wasn't an adult 20 years ago. I was 15 years old. But let's say you had how do you even have records for something that happened in 2003 or 4?
Well, you typically don't, David. And what happens with these clients is they have to try to recreate them. They have to try to go back into history and recreate them. And a lot of times they can, and a lot of times they can't support, their position. And so basically, at that point, the IRS will come and say, hey, well, let's negotiate. We estimate that you, based on our records, you would have paid this. You have no records. We'll settle somewhere in between, or you can go to court. And you better have a lot of money to go to the court.
So, do you feel like reforming the IRS would receive bipartisan support, or is this a more Republican, a more Democratic idea? What is this?
No, I think it's bipartisan support because they just want to do a better job of getting money into the Treasury. And they don't want an archaic system that's not working, right? So they want to get automated intelligence. They want to use more sophistication, better software so that they're more in real time. And there's got to be a way to do it. And I think they probably would have bipartisan support to make sure that we're getting that money into Treasury.
So right now, the government's really upside down. We're running $1 trillion deficit, and of course, Democratic candidates are floating ideas like a wealth tax and all sorts of raising payroll taxes, corporate taxes, et cetera. Do you feel like maybe we should look at making sure the IRS functions up to where it's supposed to be before we consider a lot of these new taxes?
Well, I think we should do both. At all times. I think we should always be looking at, tax system, tax law should always be, we shouldn't change it every 30 years, right, David? We did tax reform twice in half a decade. So maybe we could be doing tax changes more often so that we can kind of tweak it like we do with interest rates and have a better effect. But that being said, that not being a possibility, artificial intelligence and things like that to bring in better tax collections, I think is a well-devised investment.
Yeah, and speaking of all these proposals, do you think a wealth tax would really change the rules of the game for this country?
I don't think so, really, because, the people with wealth, look at them. New York is increasing the taxes. What are the people with the wealth doing? They're moving to Florida, right? Same with California. They're moving to Texas. So the people with the wealth, if you want to go after them for taxes, they'll go somewhere else. And that's what they do. And that's why we lowered income tax rates in the last tax reform so that it would be more competitive. And, when it's lower, then where can you go? I mean, you can go to Australia, you can go to different countries, Canada, but they're not as competitive now. So I think we did a good job adjusting that. But again, people with money have resources and they can move to different states, they can move to different countries, they can come up with different tax benefits, buy tax credits, anything to buy down their taxes. So, you got to be more sensible about those kind of decisions.
So, yeah, so this has been a big problem with wealth taxes. In fact, this happened already in Europe, everything you're describing. So, why do you think it's still an idea that's floating around right now?
Well, I think probably it's an idea because it probably resonates well with their constituents, to keep saying, hey, raise these wealthy taxes. And everyone's like, yeah, that makes sense, right? Everyone vote for me because this is an easy one. This is how we'll collect it. This is how we'll pay for all these other things. But the reality is, if they just looked at sensibly what happens in New York, what happens in California, when you raise taxes, raise consumption prices and things like that, people move. And it's the people that move are the ones that are able to do it, right? You see this, David. You see the net numbers going down in New York. Money in Treasury going to New York is going down. The deficit in New York is going up because the people that do pay taxes, that those taxes are going up, they're leaving.
Yep, yeah, and Carl Icahn just announced he's leaving, who, of course, is one of the most famous corporate bond raiders of all times, and he's heading right down the road from you, Julio. Anyway, thank you so much for taking the time to talk to us. We'll see you soon.
All right, David, take care.
Thank you all for watching. Have a great day.